May pips be upon you. I hope your weekend was outstanding and grand. Just grand. All right, let's look at pound JPY. Let's get a little breakdown here. First thing I want you to notice is we peaked and then we started coming down. Now, I love seeing this reversal candlestick pattern. All right, but it takes some examination here. At the peak, this is the swing high. We got a lower low, breaking these lows, lower high, lower low, lower high, lower low. Now, what is this? Because it made a higher low. So what does that make this? Doesn't make it anything. It makes it a swing high. Why? Because it didn't break this high. All right, this is the last lower high. This is the last lower low. This is now your trading range. Got it? Until you break this lower high, you're not breaking structure. Until you break this lower low, you're not breaking structure. Not major structure. Anything in between here is intermediate structure. Lower time frame kind of structure. Short-term highs and lows. Okay? Now, we did come back up, but we didn't even break that high. We're still under this high, but we have near relative equal highs now, and that there are resting pools of liquidity up here, and that's something to keep in mind. But we did break this low. Now, this is a short-term low, but it's pretty pivotal here because price could have went higher. Price could have just used this as a correction and then made a higher high here, right? It didn't. It failed. So we broke this short-term low to the downside. And when you break a couple of those, it made another one here. When you break a couple of those, I'm looking for a return to impulse. That is the order block that impulse price to the downside. And that order block is up here. So let's have a good look. This is a bearish order block here on the daily time frame. Price made its way back up here in a corrective way after this impulse. Impulse, correction, and you know another impulse is to follow, right? Right. So we have this big wick of rejection here. You see that green arrow? It's because I got that arrow there because we broke a high here. We broke this high here instead of closing above it. It wick high, which means it's stealing. It's grabbing liquidity that rests above here. And usually when I see that 6 to 7 times out of 10, that means price will be going in the opposite direction as the intended move by market makers. So we have the rejection. All right. Some of you might be asking, what is this doing here? This trend line. This is a magical retail trend line that has been respected, and even respected here. All right. That's just a secondary confluence. Nothing big, but when you see it and it lines up with your idea, hey, it's pretty cool. All right. Now, I need you to pay attention here. Again, we have this break of structure. We have a return to impulse. And we're expecting price to come down. Why? Because we just made a lower high. After this higher low relative to this one, all right, an intermediate swing low, all right, and its response to this 8-hour order block, price traveled up, and I'm looking to see if price indeed shifts from a bullish momentum to a bearish one. We're going to watch this closely. And I want to take you to the 8-hour order block. The 8-hour time frame, excuse me. And I want to show you something. This is an up close look at what happened as a reaction to this order block up here, this daily order block, once price came back up here. What did we make? A bearish engulfer. Oh no. You know what I like about this? Because I like to see a bearish engulfer formed as a reaction to a bearish order block. When it forms another bearish order block, I'm looking for my entry at this point. And where would that entry come? As a retest to this order block. Watch for the retest. It might have happened. It might have happened already, but I'm pretty sure it'll happen again because there's a trend line here. That this area is a diagonal resistance line, and I'm pretty sure we'll see a test of this bearish order block again, and that'll be a great entry. Not that this one isn't a great entry, but what we want to identify is the point that will be protected from a price coming back. This might be that point. We need confirmation for that. The purpose of an order block is to protect price at the very top. That is the price point that is being protected. All right. And when price runs into that order block and repels, you know that price is being protected. And when that order block is being respected, that's your entry for a short. I just gave it to you. I just gave it to you. Okay. So I'm looking for price to indicate that there's gonna be further declines, especially after forming a bearish engulfer here. I'm looking for a retest of this order block, and we'll see how it reacts once it comes again to this bullish order block. I believe with some time it'll eat its way through and come on back down to make a lower low, breaking this low. We'll see. We'll see if the bearish trend continues. That's what we want to check. Just bear in mind, this high is higher than this high. It's not out of the realm of possibility that price breaks through to the top to make new highs and to start a new trend up. Just taking a step back and looking and seeing how this market has been bullish for the longest, you know, that's not out of the realm of possibility. Okay. So just keep that in mind. But I'm looking for bearishness to come. So we'll see how it goes. Have a good trading week, and I will see you in the very next video.